With Madhav Dhar. He joins us in the show right now. Madhav, hi, good morning. What's going on with the market, and do you sense that this kind of disconnect that we are seeing, where the broader end of the market is in a bear market territory, the Nifty is just about, lurking around in a range, is this going to continue up until elections? Because just about whoever we talk to, they are saying that that's the next trigger. After that is when you're going to see some, directional move and clarity in the market.
Well, there are two or three separate, I think, big forces under play. One is the direction of the S&P, which is underestimated, and I think the Indian market is sort of doing what the US market is doing, which is drifting after a decline and a rise, is drifting sideways. And in the US, I think people are sorting out whether growth is decelerating faster than liquidity is improving, and both things are happening. The Fed is on hold, and growth is decelerating. So I think the market is trying to sort that out. India, it's similar. Growth was starting to accelerate a little bit of low levels, and liquidity was tight. And now you're seeing a pause with the RBI, a cut, and perhaps we are past the worst point of the liquidity crisis as well. So I think we're trying to sort that out, the growth liquidity dynamic, and of course there's a political overlay as well. So which is why I think leadership is narrowing, the market is drifting, and there's no clear-cut direction. But there's an old saying that you never sell a dull market. So this is a dull market, and you should just sit tight, is my sense and my posture, which is, you just hang in there, wait for it, and I think the rest of the year will end up being positive, both in the US and in India.
Time to homework for whenever that rebound really comes in the market, Madhav, I guess is now, right? When there are pockets of the market which are languishing, there are earnings which have come in bleak for various sectors, and you're seeing the pain being felt into stocks. Would you not use this opportunity to actually buy into some of these names?
Yes, I mean, it depends on the specific names, and I don't necessarily want to get into that, but I think the outlook for India is steadily improving, and I think obviously there'll be greater clarity after the election, although I happen to have a view that the election doesn't really matter at all, but it will buffet the psychology for a few months prior to that. But I think growth will accelerate. I think we're past the point of the worst in liquidity, which is terribly important. The IBC, which is probably the single best reform we've had in a long time, is starting to bite. It's starting to slowly unclog a very clogged system, and you can't get growth going till you get credit creation going, and you can't get credit creation going till you solve the problem of the banking system and the NBFCs, and that's all starting to happen. It's not clear-cut, it's not decisive, but it's underway. So yes, I would say that you want to layer into this market, and you can pick your spots and so on. But yeah, I happen to think that India is in a slightly different cycle, and we are accelerating after a sideways movement in the last couple of years.
Okay.
Which demonetization was a big part of it, the GST confusion was a big part of it. So I think we're starting to accelerate.
Madhav, hi there. Good morning. Let's also understand what exactly the outlook is when it comes to the liquidity flows. What's the sense that you're getting from the foreign institutional investors who have definitely been awfully wary? Of course, there has been a tight liquidity squeeze attributed to the NBFC crisis. How do you see things shaping up, say, even after the big event is out of the way?
No, I think as far as foreign investors, there's a huge amount of money on the sidelines for India. A huge amount of money, of very sophisticated money that's been around the block and understands what India can or cannot provide. And I think a lot of it has been disappointed with the last few years. I think people expected things to be much more market-friendly, business-friendly, economy-friendly, and that hasn't quite happened. Having said that, I think the underlying trend growth is still 7% and up. So I think there's a lot of money waiting for a little more clarity on politics, a little more clarity on the liquidity situation. And I don't think it's going to be a broad flood, but I think there's a vast amounts of money for specific situations. And particularly as the trade war with China carries on and intensifies, it's a great opportunity for India to stand out, both in terms of market share, but in terms of just the sheer volume of the economy and the size of the economy now. So I don't think the availability of money is important. I think growth acceleration and market-friendly environment that is communicated to the rest of the world is going to be important. And it's happening in its typically Indian way. You know, the IBC is very important. Demonetization is behind us. But of course, you have a little wrinkle with the big tech firms and how they operate here, which will continue to happen. But I think the money will come in as growth accelerates, and India is still very much on people's radar, and everybody wants India to win, funnily enough, and we have to help ourselves a little bit to get that money in.
Madhav, what about individual sectors? Given what's been going on within the auto space as a whole, what's the call?
I don't really have a strong view on that. You know, I think, I know it's been difficult, but I think you may be entering a good zone. Again, I'm talking in terms of 18 months or 2 years, where you are at a point where liquidity and interest rates are going to go down and improve. At the same time, growth is going to accelerate, and that tends to be a good environment for interest-sensitive stocks, and autos falls into that. So I don't really have a very strong view, and if I had to take one side of it, I take the positive side of that trade. And I would say the same thing for a very dangerous area, which is housing. You've had a 5-6 year bear market. There's been tremendous stress in that system, and I don't think we're anywhere near any kind of serious acceleration, but I think we're bottoming along on a trough. And if the banking system gets a little bit unclogged, rates come down a little bit, I think you could see a revival of that area as well from extremely depressed levels. So I think the interest sensitive area broadly is going to get interesting.
Okay, so no serious view when it comes to the overall auto space, but do you see potential when it comes to banks?
Listen, you know, banks are interesting, and I think the private sector banks have always been the greatest investment in India since the last 30 years that I've followed things closely. I don't see why that changes, and I think one of the things that we don't really reflect on as seriously as is warranted is that half of the most important sector in a growth economy is state-controlled. And therefore, you create an oligopoly situation for the most important sector where you have very few players. So they're very expensive. They'll always be very expensive. So from that standpoint, you have, as credit growth starts again, it's a small group of players that continue to win. So yes, it's hard not to like those names and those stocks, especially after sort of the correction and the hiccups we've already had. So I think it's back onto the same names and the same sector. So I feel pretty good about that. Right. Which is sad in a way, because I think you need broader credit creation and more private players and greater dissemination and inclusion. And the state sector is hamstrung in its efficiency and its inevitable bureaucratic and political meddling. So, you know, as a patriot, for a lack of a better word, it is frustrating to see that.
Okay, Madhav, great to have you on the show. Would have loved to ask a little bit more about companies wherein corporate governance issues are also withstanding and whether they're good buying opportunities, but perhaps next time.